Hello and welcome to Chartbusters. We've got an eye on the US elections, which appears is going down to the wire. So we'll have to find out who's going to be the next president of the United States. That we'll know in just a bit. But for the time being, the markets are holding with strong gains. You have the broader markets as well that's outperforming, and the Nifty as well. It's come off a little bit from the top, but still doing fairly well, Mangalam.
Still doing fairly well, especially with the recovery that we saw from lows yesterday itself. I had both of that today, and you have about 250 points from yesterday's low on the frontline indices. Let's see where they go around. There is a fair amount of volatility, which is expected as we go ahead with the US elections and some clarity on that itself. But what we know are our own earnings here, and let's put the spotlight on Oil India. The company reported an operationally weak set of numbers for the second quarter. The revenue declined by about 1.5% sequentially, but the profit after tax climbed by about 25%, as it was also aided by higher other income. Ranjit Rath, who's the CMD of the company, now joins us to discuss the quarter gone by, but more importantly, the outlook going ahead as well. Currently, the stock doing extremely well, largely on account of increased oil prices over the last couple of trading sessions as well. Thanks a lot, Mr. Rath, for joining in. You know, the first obvious question is your production target. What were, the volumes that you did in the second quarter, and what's your target for the remainder of this year?
First of all, thank you very much and good morning to all your viewers. As you would all note that we have done well in terms of our Q2 results and H1. As far as the volume is concerned, we have registered about 5.5% growth in terms of crude oil production when we compare H1 to H1. And in terms of Q2, it is about 4.79%.
Right. Mr. Rath, we'll request you to just hold on to that line and we'll come back to our conversation, because right now we just have to cut across to a comment coming in from Shashi Tharoor on the US elections. Parikshit is in conversation with him. Parikshit.
Well, we're joined by the chairman of the Parliamentary Committee on Foreign Affairs and Congress MP in the Lok Sabha, Shashi Tharoor. Mr. Tharoor, it looks like key states such as Iowa and even North Carolina are leaning towards Republican and Donald Trump right now. Iowa has been a big upset. So do you think now it's a Trump victory that we are staring at?
It certainly increasingly looks like that's likely. In fact, of these 7 battleground states identified by most experts, Harris is leading in only one, and that's Nebraska, which doesn't have a whole lot of electoral votes. North Carolina has already been declared by Associated Press for Trump, which is a bit of a blow to the Democrats. And Iowa, as you rightly say, has already gone. So it doesn't look very good. But at the same time, you really can only take a call when you get close to 90% of the precincts being counted, because in America, what happens is the less populated rural areas are counted first, and the more densely populated cities come in a bit late. And therefore, very often, as we saw in 2020, the Democrats are able to turn the numbers around at the very last stages, because the heavily Democratic leaning or liberal urban areas, their numbers come in towards the end of the count in pretty much every state. So that's what we have to see. An overwhelmingly rural state is almost a given for Trump. An overwhelmingly urban state like New York is considered a given for Harris. But in between, where you've got places like, Pennsylvania with strong rural areas and a strong city area, I wouldn't call it, and then certainly many of the news agencies are not calling it until they get close to over 90% of the votes counted, provided there's a bit of a gap there. Because if there's a too small a gap, they won't even call it at 91%. They'll keep waiting. We saw this in 2020 when final results in 3-4 states took a couple of days. So we shouldn't perhaps decide that we shouldn't start writing the obituaries of Kamala, political obituaries, until after.
A lot at stake, Mr. Tharoor, as far as India is concerned. Give us both aspects. If Kamala Harris were to win or if Donald Trump were to win, how is India going to be impacted? You're a very close foreign policy watcher, a Minister of State and External Affairs yourself in the past. So what do you feel? How things will be impacted for India?
Well, look, I'm one of those who's always believed in the last 25 years or so that the relationship between India and the US has reached a stable level of bipartisan support on both sides that makes any major ructions or any major fluctuations rather unlikely. There are lots of fundamental reasons why they should be so. ranging from America's strategic competition with China, the strong presence and influence of the Indian-American diaspora, and so on, amongst other things. Now, having said this, it's also true that there are some differences. Trump, for example, is very, very tough on tariffs and trade. And he's also said that India has too high tariffs, and if India is going to have tariffs on America, America will have tariffs on India. That's going to be a particular challenge because with tariffs, our exports to America will take a very bad blow. A second area is he's strongly anti-immigration, and that might affect and that might tighten the number of possibilities, not just for the H-1B visas that Indians want, but also for family reunions of those who've gone there, stayed on, become permanent residents, and want to get their families to join them. A third broad issue is that Trump is very transactional. He basically keeps wanting to know what's in it for me. What are you doing for me lately before I do anything for you? And that's something that India is going to have to reckon with. We can't expect concessions. You may remember last time, the last Trump administration actually took India's name off the list of those countries that had preference on trade, the GSP. If they do that kind of stuff, it's going to be much tougher for us. With Trump, the Biden administration hasn't done that. Kamala hasn't done that. Kamala, on the other hand, I think, broadly speaking, sympathetic to India, visited here many times as a child. Her mother is Indian. She herself, therefore, is half Indian, comfortable with her Indian name, comfortable with many Indian dishes, as we saw during her failed campaign when she ran in the primaries against Biden 4 years ago. She was doing a dosha cookout with Mindy Kaling and that sort of stuff. She's got some affinities for our culture, which is very welcome. Nonetheless, she's also from the left wing of the Democratic Party and is bound to be fairly tough on some of the policies of the Narendra Modi government. So there are pros and cons with both candidates. Bottom line, I think we'll be fine whoever wins.
Right. And finally, I know you have to rush, Mr. Tharoor, but what do you feel about the rise of the right? Considering this election is so close, even in places like Pennsylvania, Trump is leading right now, though not projected a winner. But generally, what does this election say about the mood of the American population?
Well, I'm, to be honest, a bit surprised because especially the last couple of weeks of the Trump campaign, the man was practically imploding, doing some bizarre things, saying some even more bizarre things, but clearly appeals to a certain segment of the American population. I don't think the educated elites, women, liberals, the people on the two coasts, etc., have any sympathy for him and his style of politics. But very clearly, the vast majority of the hinterland, the rural states, the Midwestern states, the southern states, have stuck with him despite some of this erratic behavior. And therefore, I think we're quite likely to see if Trump does seem to pull it off, as looks like the case so far, then it's going to be a lot of breast beating on the side of the liberal elites around the country. Where did we go wrong? What happened, etc. I don't think that the fundamental nature of the American system should surprise us very much. There are elements to all of this that will explain the results. But let's get the results first. We'll talk about it later.
All right, Mr. Tharoor, thank you so much for joining us. I know you have to rush for a meeting, and we appreciate the fact that you joined us and gave a sense on how this election will impact Indo-US ties going forward.
Well, Parikshit, thanks a lot for that. Mr. Tharoor saying that either way, it's good for us, no problems for India, but too early to call those elections yet until the 90% vote count is there as well. But let's slip back to the conversation that we are having with the management of Oil India. Mr. Ranjit is still with us. Apologies to keep you waiting, sir, but you were giving us some production details. You've said that 4.79% is what you've seen in terms of growth production quarter on quarter. 5.5%, was the production higher by this year on year. But that's short of your guidance of around 9 to 10% for the full year, right? So if you could give us a sense of what's your guidance for the remainder of this year in terms of production?
In terms of, first of all, thank you very much. In terms of production, we are looking at about 5.5 to 6% growth, riding on the wave that we are doing right now. And of course, we are also looking at some sales improvement, which has been more or less 4.5% growth this year. I mean, this first 6 months.
All right. Hi, Mr. Rath. Good morning and good to speak to you. This is Nigel on this side. 5.5 to 6%. That's for the full year.
Yes, that's what is the plan.
In both segments.
in both the segments.
Got it. All right. The oil production ramp up, if you could help us out with an absolute number. I think last year it was around 3.4 MMT. And you...
I would put it in a manner that last year we did highest ever production in terms of oil and gas in total, 6.53 million metric ton oil and oil equivalent. And this year also we are on track to register a similar kind of number.
That will be higher by 5.5 to 6%, right? In comparison to what you did last year.
Actually, see what happens. Oil India manages good reservoirs which are having potential. So we do a lot of reservoir management to ensure that we sustain the momentum of growth despite the decline in production. So we are looking at a number around that.
All right, we take that point. One of the reasons why the stock has been doing well over the last couple of days also is a bit of a spike that we've seen in oil prices. Closer to $75 per barrel is what we are at right now. I just wanted to understand what your realization is at oil prices of $75 per barrel. And have you heard anything on the scrappage of windfall taxes?
Windfall taxes, you all know that it is with a threshold of $75 per barrel. So since now the oil price is below that, so there is no windfall tax. But I have no clue about the proposition that you were talking about. As far as our realization is concerned, considering the fact that there has been some drop in the oil price, we are hovering around $80 to $82 per barrel.
But will you be continuing to, get realizations upwards of $75 per barrel? The street is worried that maybe once it crosses that, then the windfall tax comes again.
See, what I would like to focus and then share with the viewers is we would continue to outperform our performances in terms of our physical contribution and physical growth, which is under our control. So we would always attempt to produce more and add more exploration accuracy to our portfolio.
Since we're talking
price points will be controlled by the global market. So we would focus on our physical performance.
All right. Since you're talking about realizations, sir, what about gas realizations? What were they in the first half of the year and last quarter?
I'm sorry, I could not get that.
Gas realizations. What were they in the past quarter, in the first half of the year?
I don't have that number right now.
Okay, all right. Maybe the next time you could help us out with that. But let's focus on the Numaligarh refinery. Their capacity was expected to double or triple, I think so. When is that expansion likely to come on stream? And what kind of impact will it have on GRM, sir?
Okay, Numaligarh refinery is getting tripled from 3 to 9.
Yes.
And we are looking forward to complete that particular project by end of 2025, the calendar year, December 2025, which would also include a 1,640 kilometer of pipeline from East Coast to Numaligarh. And in terms of GRN, what has happened is we were doing about $13 per barrel. So that was last year. This year, this first 6 months, we have done about 4.5. Now, the question is, because there is a very limited margin available in terms of the cracks, this has been the scenario. But going forward, we are hopeful that situations will improve.
All right. Final question then. When will IGGL come on stream? It was supposed to come on stream in August, if I remember. It's been pushed to the fourth quarter. Is it still on track, or do we see further delays here? And what's the capex that you're putting in out here?
See, IGGL is actually emanated from the hydrocarbon, Northeast hydrocarbon region, where 5 companies are in stake, having stake in terms of 20% each. And phase 1 of IGGL, we are looking at by mechanical completion by end of this year.
All right. And how much money are you putting in this?
At an equity level, it's about, from Oil India point, it's about 250 crore or
Got it. Okay, all right, Mr. Rad, we appreciate you joining in, wishing you all the best for the second half of the year. And we look forward to chatting up with you at some time of this quarter or at the end of the third quarter.
Thank you very
For the
much
time.
for having me.
All right.
Thank you.
For the time being, we slip into. All right. I think we need to cut across to the RBI governor who's addressing the press.
Certain serious deficiencies, it is pointed out to the institutions. We give them enough time to take the corrective measures. In many cases, the corrective measures are taken, and we don't take any action at all. In fact, the number of cases where we found deficiencies and where we did not take any action because the corrective actions were taken and whatever were the regulators' expectations or, regulators' expectations, they were complied with. So the number of cases where we did not take action is actually much larger. Now, that doesn't mean that there is something fundamentally wrong with our NBFC sector or the financial sector. On the whole, the financial sector, the NBFC sector at the system level remains very robust. It's only in a few cases where we do not see adequate action being taken, or we do not see action being taken in time and in sufficient, is not up to our expectations, or it is getting delayed. Only in those cases we take action. And the detailed reasons for the action is always shared with the individual company. It's not as if they are kept in the dark. Action is preceded by bilateral discussion with them, bilateral engagement with them. They know what are the concerns of the regulator. When we take the action, we also share with them formally the reasons as to why we have taken the action, and we point out that these are the areas where we find deficiencies and we would expect you to act. Our action is not punitive. Our action is corrective. You would have seen in a number of cases where we have taken action after 6 months or 8 months when, the compliance is completed. Its compliance is 100% or near 100%. And if we are satisfied that the rest of the compliances will be done in the next few weeks or so, we withdraw the restrictions. It is good for the individual institution itself, for its sustainability. It is good for the financial sector, and above everything, it is good for the consumer. All actions are taken in the consumer's interest. And communication, Shri Dovalji talked about, Shailesh Dovalji talked about RBI's communication. You would have seen that the press note which we issue these days when action is taken are fairly explicit. They point out why the action has been taken. So our effort has been to be far more consultative, direct engagement, transparent communication, and measured action. It's not abrupt, it's not arbitrary. You may say I'm being defensive. I'm not, because I think it is necessary in a gathering, in such an informed and well-informed gathering like this, where there are so many, I think all the participants are from the BFSI sector. I think it was very important for me to explain the things in their totality. Sorry for that very long answer, but I think it was necessary to, put things in the right perspective. Thank you.
Thank you. Thank you, sir. It's very, I think all of us should feel happy that consumer protection also has come on the RBI radar. And one interesting part is this: you are very democratic in your approach. You don't care about the stature of the entity, be it NBFC, banks, payments bank. Whenever you find something is wrong, you flag off without caring for how big or how small is the entity. So, sir, let's come back from non-banking to banking. 10 years back, 2014, banks were in deep trouble, very high NPA, so on and so forth. And then the AQR has come, asset quality review, banks have come up clean, and as we speak, they are in pretty good health. But still, you continue to show your concern about credit uptake. You think that banking sector is a little overdoing on the credit front. It seems that if we are looking for a 7%, 7.5%, 8% growth, banks should be in the business of giving credit. But you continuously warn them. What is happening there?
You see, our action and approach is very nuanced. It's not so much that, the credit growth is high or low. We don't have a view on that, whether the credit growth should be this much or the credit growth is high or low. It depends on the situation, the conditions prevailing in each bank. There are opportunities to lend. Naturally, the banks will lend. After COVID, there was a spurt in consumer, demand for retail loans, etc. Naturally, the banks and the other lenders will lend where there is an opportunity. There are a couple of things which we always try to monitor. Number one, what is the underwriting standard which the bank or the other lender, the NBFC, what are the underwriting standards? In the banking sector, by and large, I feel that the underwriting standards today in India, there has been considerable amount of improvement. In the NBFC sector also, there has been improvement, but there still we find a few outliers where we feel that the underwriting standards need to be made more robust. So again, at the system level, at the system level, there is no issue. Let me be very clear. So we always look at what kind of underwriting standards are being followed, whether the underwriting standards are being diluted only to push credit. So that is number one. Second thing is we also look at the liability side with regard to each and every, you are talking about banks, so I will talk about banks. About each and every banking entity, we look about the liability side also, where the deposits are growing proportionately with their credit growth, because there has to be some correlation between them. And we have not hard-coded that this shall be the CD ratio for the banks. RBI has not prescribed any, it's not, there is no hard coding. But this is something which I think every bank, every banker understands, that the CD ratio cannot be, completely skewed. So therefore, we look at, in the liability side, what is the composition of the liability? Are these short-term borrowings to sustain a medium-term, a loan which has a life of, let's say, 5 years or 3 years? You raise money, a certificate of deposit, and based on that, which has a life of up to, let's say, 1 year, and based on that, you are giving credit. And to what extent you are giving credit for 3 years or 5 years? So we see whether the liability and the balance side, the components and the structure of liability and the structure of the asset side, whether they are well balanced. So we look at the deposits. Now I mentioned that we have not hard coded any CD ratio, but I think the banks are today far more aware about the requirements on this. And CD ratio at the system level today is around 80%. Which is, I think, a considerable amount of improvement over what it was a few months ago. But there are, few, just you can count them in, some outliers here and there, where also we see that there is improvement. So therefore, we look at two broad factors when it comes to credit growth. One is the underwriting standards. And in underwriting standards, we also see whether the institution, not so much in the case of banks, but in the case of NBFCs, whether it has got the bandwidth to sustain that kind of, high credit growth, and whether in the process the, underwriting standards or the due diligence that is expected of them is getting diluted. So
Welcome back. Let's get to the conversation with Wellspun Enterprises. The last quarter was fairly stable, and the guidance given as well is quite interesting to find out. And what's the way ahead? We're joined by Mr. Sandeep Garg, the MD of the company. Hi, Mr. Garg. Good morning, and thanks a lot for joining us here on CNBC-TV18. Just want to confirm three big numbers. Revenue target you had spoken about was around 4,000 crores. EBITDA number of around 750 crores. And order book, I think, of around 17 to around 20,000 crores. Hold on to all three of them.
Good morning, Mangalam, and thanks for taking me on this show. Yes, all the three numbers we are holding, that the total income at a consolidated level will be around 4,000 crores. We expect the EBITDA to be in the range of 750 crores. And the order book should close between 17,000 to 20,000 crores when we close this financial year.
All right, thanks for confirming those numbers. Let's talk about the very near future then. Your peer KEC has flagged off some concerns with regards to order wins and execution challenges as well. In light of this, what's the update on the Maharashtra road order? What is your order pipeline? What do you expect in the remainder of this year? And if you could give us a number to that.
So, talking about Maharashtra order where we are L1, we are hopeful that post the election campaign, elections are over, we should be awarded the contract. So that's something which we are reasonably confident. In terms of the situation that we are facing on the order pipeline, we have a visibility of almost 6 lakh crores of orders which we should become addressable over the next 5 to 7 years, which is a large number. It cuts across the water segment as well as the transportation segment, wherein the split will be about 2 lakh crores on the transportation segment and about 4 lakh crores in the water segment. More interesting is that what the opportunity is shaping up in water. We believe that water is a necessity which we need to address. We are addressing a necessity of the country.
Right.
And we get that, Mr. Garg. We get that, Mr. Garg. We also get the large pipeline that you have or visibility that you have over the next 5 to 7 years. The concern is more immediate than over the next 5 to 7 years, right? So if you could give us a sense of what your current L1 position is and how many LOAs or how many awards are you likely to get in the next couple of quarters?
So one location we are L1, which is about 1,850 crores worth of an order. We are in the process of bidding for some BOT projects, which should materialize in next 2 quarters or so. So we expect another 3,000 to 4,000 crores order book to be built up in that segment as well. More interesting is what is happening on the smart ops, where we believe the traction is very huge. We believe that that's a technology that will solve a lot of issues and enable us to book orders going forward. Ever since we have announced our joint venture with Smart Ops UK, we already have the first order of 25 crores for Pandharpur in Maharashtra. So we are very hopeful that in addition to the normal business lines that we have been focusing, Smart Ops will also act as a substantive value creator for the company.
Got it. Mr. Garg, just to reconfirm, those concerns that were flagged up by KEC, you don't believe there's a risk to your business, right?
I don't think so. There is small differences between one client's paying ability at a particular point, but we are not seeing such a problem.
That's right. We just want to clear the air on that. And very quickly, you've gone ahead and purchased 9.9% stake in Wellspun Michigan Engineers, which takes your stake to around 60%. Rationale? And do you look at increasing stake further in this company?
So we believe that the acquisition of Wellspun Michigan was a value creator, and we continue to believe so. We believe that the acquisition of this 9.9% of equity is value accretive even at this valuation, and we would want it to be improved if it is possible. However, we are comfortable with the current position of 60%. The idea here is to try and create a water vertical which is a one-stop shop for all needs, whether it is domestic, it is municipal, it is industrial, and really offer something which hitherto in India is not a common feature. So we want to address the complete value chain of the water, and that's why we are moving in the direction that we are moving. Also, important to us is the tunneling sector, where Wellspun Michigan brings value to us, and we see a lot of work unfolding there as well. So these are the two rationales for picking up additional stock in Wellspun Michigan.
Right, Mr. Garg, thank you so much for stopping by, giving us all the details for the next couple of quarters. Though we'd like to have a longer conversation with you, pressed for time today. We'll do that at a later date. With that, we are out of time on this edition of Chartbusters with the news that the markets picked up once again. The Nifty closing in on the higher end of today's trading range so far. We wrap up on Chartbusters. Stay tuned. Trading Hour takes the market action forward.